the single most important thing that happened in this epic was the approval of the spot Bitcoin ETFs. That basically was crossing of the chasm, which said that Bitcoin is not a multi-$100 billion asset class. Bitcoin is a $10 to $100 trillion asset class. So that was a 10x to 100x.
Though we might not appreciate its full impact for a few more years. The January approval of several spot Bitcoin ETFs by the U.S. Securities and Exchange Commission was truly a historic moment that ushered in a new era for the leading cryptocurrency and the overall digital asset space. According to MicroStrategy, founder and executive chairman Michael Saylor, the SEC's green light gave Bitcoin the required ammunition to go from a multi-$100 billion asset to a $10 trillion or even $100 trillion asset. Saylor believes the approvals also caused a major political shift in the United States, especially because the success of the ETFs showed Wall Street how massive of an opportunity the nascent industry presents. We have now gone from an era of uncertainty about Bitcoin's and crypto's future in the United States to an era where the cryptocurrency industry is a major campaign topic. While speaking at the Libertarian National Convention on Saturday, former U.S. President and leading candidate of the Republican Party, Donald Trump, again voiced his support for Bitcoin and crypto and pledged to support the industry's growth in the U.S. if elected as president in November. To a cheering crowd, Trump said, "I will stop Joe Biden's crusade to crush crypto. I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody to the nation's 50 million crypto holders with your vote. I will keep Elizabeth Warren and her goons away from your Bitcoin, and I will never allow the creation of a central bank digital currency." During a recent interview with Peter McCormick, host of the What Bitcoin Did podcast, Saylor explains that the wind of change is sweeping across Washington, cautioning anti-crypto politicians that they either have to get on board or bear the consequences of fighting an industry that will fight back with everything it has. Saylor adds that with Wall Street and the banks now on board the Bitcoin and crypto train, these politicians will have no choice but to throw in the towel and admit defeat as the entire digital asset space goes mainstream.
And that was exacerbated by the fact that over the course of 4 years, the SEC never put forth a digital assets framework, right? So you've got an entire industry, and for it to live, it needs you need a way to establish a digital commodity versus a digital security versus a digital exchange versus a digital currency. And the position of the regulator in this case was, I'm not giving you any framework, and the implication is you guys all have to just roll over and die. So how do you tell 400 million people that support an industry and the entire industry that they all just have to cease operating, right? And so that's a very obstructionist view, like a non-constructive view toward the crypto industry. And then I think the third thing that happened here is we had a lot of banks. You know, there are rumors in the market that there were banks that spent $100 million or more to get ready to do Bitcoin custody. Okay, so you have a bunch of banks spending money, they're ready to do it, and then SAB 121 is just capriciously denying them of the ability to do it without explanation. That brought the SAB 129 debate because SAB 121 means Wall Street, the banking law, the bankers, the crypto lobby, and the Bitcoin lobby, all four of those constituencies all side together on the same issue. So that being the case, the SAB 121 repeal comes up, and then the position of the administration is we're proactively going to veto it. And now you basically have the administration against Wall Street and crypto and Bitcoin and the banks.
On May 16, the Senate passed a CRA overturning the SEC Staff Accounting Bulletin 121, an accounting rule that imposed stiff capital requirements on crypto custodians, making it difficult for banks to provide crypto custody services. Before the House voted to repeal SAB 121, the White House issued a notice threatening to veto the resolution and reinstate the Southeast Seas accounting rule. According to Cody Carbone, the Chief Policy Officer of the Chamber of Digital Commerce, after the resolution was sent to Biden's desk last week, the president had 10 days to do one of three things. veto the decision, sign it to overturn SOB 1-1, or do nothing by the deadline. If Biden does not do anything by the June 3 deadline, the bill will be signed into law if Congress is in session, or face a pocket veto due to the president's inaction if Congress is not in session. As the deadline draws closer, the entire cryptocurrency industry awaits Biden's decision. But it's important to recall that the president had promised to veto the resolution to overturn it. In a statement sent out on May 8, the administration wrote, "The administration strongly opposes passage of HE Resolution 109, which would disrupt the SEC's work to protect investors in crypto asset markets and to safeguard the broader financial system." HE Resolution 109 would invalidate SEC's SAB 1-1, which reflects considered SEC staff views regarding the accounting obligations of certain firms that safeguard crypto assets. By virtue of invoking the Congressional Review Act, it could also inappropriately constrain the Southeast Sea's ability to ensure appropriate guardrails and address future issues related to crypto assets, including financial stability. If the president were presented with HE Resolution 109, he would veto it. Despite this ominous declaration, Saylor believes the resolution will not be vetoed. Here are more clips from his interview with McCormack.
I think right now, the best expectation is the crypto asset class will be legitimized, supported by both parties. There's an industry, crypto is an asset class. There's an entire range of use cases, 24/7 digital trading, digital art, NFTs, tokens, decentralized this, functionality, DeFi. There's a lot of things that will be considered in a more open light, and Bitcoin will be the leader of the crypto asset class.
According to a social media post from SR Bloomberg ETF analyst Eric, a bipartisan group of House lawmakers wrote a letter to SEC Chair Gary Gensler, urging the Commission to approve spot Ethereum ETFs and other digital assets because such products offer investors crypto access in a regulated, transparent, and safe format. The letter reads the approval of spot Bitcoin exchange-traded products. ETF represents a pivotal moment for both digital assets and our financial markets. We urge the Commission to maintain a consistent and equitable approach when reviewing upcoming applications for other digital asset-backed ETH. Specifically, the Commission should apply the same principles set forth in the approval of the spot Bitcoin ETHs as it evaluates the pending other ETF applications, as the legal considerations pertinent to Bitcoin also apply to Ether. In his post, Eric points out that the letter states other digital assets, not just Ethereum, which means the ETF industry is probably trying to go all in on cryptocurrency ETFs. This ties in neatly with the Saylor's prediction that other cryptocurrencies and digital assets will share the spotlight alongside Bitcoin in the mainstream markets. Though a Bitcoin maximalist, Saylor says sharing the spotlight with other cryptocurrencies and digital assets will help strengthen Bitcoin's place in the financial market and greatly benefit the overall digital asset space.